Silver X Mining stands out as a case study in operational turnaround and district-scale consolidation. Operating primarily in the Huachucalpa mining district of Huancavelica, Peru, the company has transitioned from a period of heavy repositioning and technical bottlenecks in 2023 and early 2024 to a state of sustained profitability and aggressive scaling by the end of 2025. The company's flagship asset, the Nueva Recuperada Project, is not a singular mine, but an expansive 20,795-hectare land package encompassing over 200 exploration targets and several high-grade mining units. This district-scale control allows Silver X to leverage a hub-and-spoke operational model, centralizing processing while tapping into multiple high-grade vein systems, such as Tangana, Plata, and red silver. The investment thesis for Silver X is built upon three pillars: the fundamental value of a massive silver polymetallic resource base, the successful execution of a margin-focused operational turnaround, and a fully funded path to becoming a mid-tier producer with an annual output exceeding 6 million silver equivalent ounces. As silver prices reached multi-decade highs above $60 per ounce in late 2025, the intrinsic value of Silver X's inventory became increasingly difficult for the market to ignore. While the junior mining sector often faces significant dilutive risks, Silver X's recent C$21.5 million financing and its strategic loan facility with Trafigura suggest a maturing capital strategy aimed at non-dilutive growth and resource conversion. This analysis provides a deep dive into the geological, financial, and jurisdictional factors that define Silver X's current trajectory and its potential for significant re-rating in 2026. Structural dynamics of the global silver market. To evaluate Silver X, one must first understand the unprecedented volatility and structural shifts in the silver market during 2025. The year was characterized by a surge in silver prices, which outgained gold with annual gains exceeding 120%, driven by intense industrial consumption and a supply chain dislocated by tariff fears and inventory shortages. The cumulative supply shortfall from 2021 to 2025 has reached nearly 800 million ounces, highlighting a market that is fundamentally undersupplied.
The junior developer window. The lack of new silver discoveries over the past decade has created a development window for companies with advanced stage assets. Because it typically takes 10 to 15 years to bring a new greenfield mine from discovery to production, companies like Silver X, which operate past-producing brownfield sites with existing infrastructure, are uniquely positioned to meet immediate demand. The supply deficit is exacerbated by the fact that most silver is produced as a byproduct of base metal mining, meaning primary silver supply is highly inelastic to price changes. Silver X, as a primary silver-focused producer, offers pure-play leverage to these market dynamics. Asset portfolio and geological framework. The Nueva Recuperada Project represents a strategic consolidation of the Huachucalpa mining district, a region recognized as one of Peru's most productive silver jurisdictions. The property integrates production, development, and exploration assets within a contiguous land package that allows for significant logistical synergies.
The Tangana mining unit is currently the core operational focus for Silver X. It is a high-grade, narrow-vein underground operation that targets polymetallic silver, gold, lead, zinc mineralization. In 2023, the unit underwent a temporary suspension to address development backlogs and transition to a more selective mining method aimed at controlling dilution. By 2025, this shift had largely succeeded, with the company accessing higher-value mineral zones and improving operating margins. The Tangana unit is supported by the Recuperada processing plant, which has historically operated at 720 tons per day, but is being adapted to reach 1,000 tons per day by the second quarter of 2026. This unit provides the immediate cash flow needed to sustain the company's broader expansion plans. The Plata mining unit. The Plata mining unit, or PMU, is an advanced stage restart project that represents a critical component of the company's path to mid-tier status. The 3,829-hectare property features 17 surface-exposed mineralized veins and contains a historical resource of approximately 3.2 million ounces of silver. Silver X secured a 15-year social agreement with the Carhupata community in mid-2024, granting full access for exploration and mining.
The 2025 Preliminary Economic Assessment envisions Plata as a secondary mining center that will feed high-grade silver ore to the district's expanded processing capacity. The restart of Plata is expected to significantly lower the overall cash costs of the company by contributing higher-grade material to the production blend. Resource inventory and exploration upside. Silver X controls a massive resource base that serves as the foundation for its long-term expansion. The district contains over 200 identified exploration targets and more than 500 outcrop veins. To unlock this value, the company launched a 40,000-meter diamond drill program in October 2025, the largest in its history. This program is designed to upgrade inferred resources to the measured and indicated categories and test high-grade satellite targets like red silver and Tangana West, where surface grades of 15 to 20 ounces per ton have been identified. Financial performance and operational turnaround. The financial trajectory of Silver X in 2025 demonstrates a profound recovery from the operational challenges of the previous 2 years. The company's focus on margin over volume and the implementation of cost containment measures have resulted in a significant narrowing of net losses and a return to positive operating income.
2025 Financial Results Analysis. For the 9 months ended September 30, 2025, Silver X reported an operating income of $2.1 million, compared to an operating loss of $180,000 in the same period of 2024. On a quarterly basis, 3Q25 operating income surged 166% to $486,000. Net losses for the 9-month period decreased by nearly 80% year-over-year, dropping to $740,000. The improvement in profitability was driven by a $2.7 million reduction in the cost of sales. A major contributor to this was an 82% reduction in depreciation expense, which resulted from a significant increase in M&I resources. Because depreciation is calculated based on the available resource base, expanding that base lowers the per-ounce accounting cost, directly benefiting the bottom line. Cash flow analysis. Silver X Mining Corp underwent a significant cash flow transformation in 2025, transitioning from a period of severe liquidity constraints to a well-capitalized state focused on production scaling. The company's cash flow analysis can be broken down into operational improvements, major financing activities, and long-term capital projections. Operational cash flow turnaround. The company's ability to generate cash from its operations improved markedly in 2025. For the 9 months ended September 30, 2025, Silver X reported an operating income of $2.1 million, a substantial recovery from the $180,000 operating loss recorded during the same period in 2024. While the company still reported a net loss of $740,190 for the period, this represented a nearly 80% improvement year-over-year.
A critical turning point occurred in September 2025 when the company began generating a meaningful operating margin due to improved throughput and access to higher-value mineral zones. To sustain this, management launched the Plan 100 initiative, which targets a combined operating and sustaining cost of $100 per ton processed to ensure long-term profitability. Financing and liquidity position. The most dramatic change in the company's cash flow profile resulted from financing activities. For the first 9 months of 2025, net cash provided by financing activities totaled $16.7 million. This was primarily driven by a $21.5 million oversubscribed private placement closed in late September. This capital injection allowed the company to increase its cash position from $784,429 at the end of 2024 to $13.97 million by September 2025, reduce a massive working capital deficit of $14 million to approximately $1.1 million, secure a $2 million prepayment facility from Trafigura for a third flotation circuit, which carries a 20-month repayment term at an interest rate of SOFR plus 6%. Investing activities and capital expenditure. Outflows for investing activities have been strategically directed toward resource expansion and infrastructure. During the first 9 months of 2025, Silver X invested approximately $3.29 million in mineral properties and $1.05 million in property, plant, and equipment. These funds are supporting the company's largest ever 40,000-meter drill program and the acceleration of underground development at the Tangana unit.
Future cash flow projections.
Analysts currently forecast that Silver X will reach a cash flow break-even point in 2026. The company's long-term financial framework, established by the September 2025 Preliminary Economic Assessment (PEA), projects a cumulative after-tax cash flow of $606 million over a 14-year mine life. This expansion plan requires an initial capital expenditure of $82 million, but is expected to achieve a full after-tax payback within 3.0 years, assuming a 3,000 ton per day production rate. Given the current high silver price environment, some analysts suggest these projections could be conservative, with potential for even higher cash generation if prices remain elevated through 2026. Revenue and pricing. Despite a 16% decrease in processed tonnage in 2025, a result of the shift toward more selective mining, net operating revenues remained relatively stable at $15.6 million. This stability was made possible by the sharp rise in realized metal prices. In the third quarter of 2025, the company's average realized silver price rose 35% to $39.94 per ounce. This highlights the company's high sensitivity to silver prices. Even with lower production volumes, the increased value of the metal sold allowed Silver X to sustain its operational momentum. Cost metrics and Plan 100. While operating income turned positive, all-in sustaining costs (AISC) remained high during the development phase of 2025. AISC for the 9 months ended September 30, 2025 was $30.70 per Ag EQ ounce, a 33% increase over the previous year. In 3Q25, AISC rose to $36.80 per ounce, primarily due to strategic capital expenditures for underground infrastructure at Tangana and the front-loading of costs related to the company's expansion.
To address these costs, the company launched the Plan 100 initiative. This strategic program targets a combined operating and sustaining cost of $100 per ton processed. By focusing on selectivity, dilution control, and equipment upgrades, Silver X aims to position itself among Latin America's lowest-cost silver producers as it scales toward full capacity. The 2025 Preliminary Economic Assessment, scaling to 3,000 TPD. The filing of a new PEA in September 2025 provided the technical validation for Silver X's transition from a junior producer to a mid-tier player. The study outlines a path to quintupling production by 2029 through the development of the Nueva Recuperada District as a whole. The two-mill strategy. A key differentiator in the 2025 PEA is the use of 2 separate milling facilities. The plan involves expanding the current Recuperada mill from 720 TPD to 1,500 TPD, constructing a new 1,500 TPD mill at the Tangana site. This dual-facility approach reduces trucking distances between mining units and processing centers, lowering logistical costs and operational risks. It also allows for phased capital investment, where the company can ramp up production at Tangana while simultaneously advancing the restart of the Plata mine. The target is to reach a combined 3,000 TPD capacity, transforming Silver X into a top-tier silver polymetallic operator in South America. Capital structure and liquidity position. The ability to execute a multi-million-dollar expansion requires a strong balance sheet and access to capital. In 2025, Silver X underwent a complete recapitalization that resolved its immediate working capital issues and provided a clear runway for growth. The proceeds are allocated toward the 40,000-meter resource conversion and expansion drill program, acceleration of underground infrastructure projects at Tangana, pre-construction development and permitting for the new 1,500 TPD Tangana mill, general working capital and corporate purposes. Balance sheet strengthening. As a result of the financing, the company's cash position increased from $784,429 at the end of 2024 to approximately $14 million by September 30, 2025. More importantly, the company successfully reduced its working capital deficit from nearly $14 million to approximately $1 million. This turnaround in liquidity significantly de-risks the company's near-term obligations and allows management to focus on long-term value creation rather than short-term survival. Debt management and the Trafigura partnership. Silver X has maintained a strategic relationship with Trafigura, a global leader in commodity trading. In June 2025, the company secured a $2 million loan facility from Trafigura dedicated to the production of additional copper concentrates. The facility carries an interest rate of SOFR plus 6% and is tied to a 100% offtake agreement for all copper concentrate produced at Nueva Recuperada until 2029.
This partnership provides Silver X with flexible capital for the implementation of a third flotation circuit at the Recuperada plant, allowing the company to capture the high value of copper as a byproduct. Furthermore, the company has historically used share issuances to settle accounts payable, such as the $1 million debt settlement in 2024, showing a proactive approach to maintaining a lean debt profile. Management and corporate governance. The execution of a district-scale expansion plan requires a leadership team with deep technical and financial expertise. Silver X is led by individuals with extensive backgrounds in major international mining firms and a track record of building junior companies into successful mid-tier producers. Executive leadership. Jose M. Garcia, President, CEO, and Director. A co-founder of the company, Garcia has over 20 years of experience in mining engineering and mineral economics. His previous roles at Anglo American, BHP, and Inmet provide the institutional knowledge necessary to navigate complex production environments across multiple continents. Ricardo Martinez, General Manager. With a focus on talent development and organizational strategy, Martinez is responsible for the operational alignment needed to execute the 3000 TPD expansion plan. David Gleit, CFO, joined in 2024 with over 25 years of finance experience. His background as CFO of Stracon and a corporate development officer at Volcan Compañía Minera, one of Peru's largest producers, provides Silver X with sophisticated financial management and deep ties to the Peruvian capital markets.
Board of Directors. The board includes individuals like Daryl Carty, who has a history of co-founding companies that were later acquired by majors like Kerr Mining and Kinross Gold. This background is relevant for Silver X, as the consolidation of the Nueva Recuperada District could make the company an attractive target for larger producers looking to replenish their own silver reserves. Francis Johnstone brings over 3 decades of corporate finance and junior mining experience, providing oversight for the company's capital markets activities. The Peruvian jurisdictional landscape. Peru remains the world's second-largest producer of silver and copper, but its mining sector is governed by complex social and regulatory dynamics. For an investor, understanding how Silver X manages its social license to operate is as important as understanding its geology. Regulatory reforms and the single window. In February 2024, the Peruvian government introduced the single window for mining, an initiative aimed at simplifying the permitting process and reducing administrative delays. This is a significant tailwind for Silver X as it seeks environmental and social impact assessment (ESIA) approvals for the expansion of the Recuperada plant and the construction of the new Tangana facility. However, the government is also considering a use-it-or-lose-it framework for mining concessions. Proposed reforms could limit concession periods to 10 years and mandate strict development milestones. While this could pose a risk to purely speculative explorers, it may benefit active developers like Silver X. By demonstrating consistent production and aggressive exploration, as seen with the 40,000-meter drill program, Silver X is more likely to retain and expand its landholdings than inactive competitors.
Social license and community relations. Social conflicts have historically been a major risk for mining in Peru. Silver X has mitigated this risk through deep-rooted community engagement and long-term legal agreements. Huacho Colpa. A 12-year social agreement extends access through 2035 for the processing plant and Tangana unit. Carhuapata. A 15-year agreement provides unrestricted access to the Plata project. The company's employment of local workers, 65% of the workforce, and its support for over 30 local businesses create a shared economic interest that stabilizes its social license. Comparative analysis, Silver X versus industry peers. When compared to established silver producers and other high-growth junior miners, Silver X appears undervalued on a resource per share and enterprise value to revenue basis. Large cap versus small cap metrics. In 2024 and 2025, major producers like Pan American Silver reported record free cash flows and achieved AISC in the range of $14 to $16 per ounce for their silver segments. While Silver X's current AISC is much higher, $30 plus, its long-term PEA target of $15.80 per ounce aligns it with the cost structures of these major players. For an investor, the re-rating opportunity exists in the gap between Silver X's current high-cost development phase and its future low-cost production phase.
Investment catalysts for 2026. The year 2026 is expected to be a period of transformative catalysts for Silver X as the company puts its recently raised capital to work and advances toward the goals outlined in the PEA. Production ramping and throughput goals. A primary catalyst will be the achievement of a 1,000 TPD throughput rate by 2Q 2026. Doubling the current production output will significantly increase cash flow and demonstrate the company's ability to manage technical scaling. The market will be watching closely for the implementation of the Plan 100 cost reductions, as a lower AISC will be the ultimate validator of management's operational strategy. Exploration results and resource upgrades. The 40,000-meter drill program is expected to produce a steady stream of news throughout 2026. High-grade intersections from the Plata unit or the discovery of new vein systems in red-silver could lead to significant upward revisions of the company's mineral resource estimate. An updated MRE in late 2026 could provide the foundation for a revised PEA or a pre-feasibility study, PFS, further de-risking the project for potential institutional investors or acquirers. Permitting and construction decisions. The approval of the updated Environmental and Social Impact Assessment, ESIA, for the Tangana facility expansion is expected by the end of 2025 or early 2026. Securing these permits will allow the company to move into the final design and procurement phase for the new 1,500 TPD mill. Any news regarding non-dilutive financing for this $82 million capex, such as an expanded debt facility or a streaming agreement, would be viewed positively by the market.
Risks and mitigation strategies. No investment in a junior miner is without risk, and Silver X faces several challenges that could impact its valuation. Execution and operational risks. The transition from a 720 TPD operation to a 3,000 TPD operation involves significant execution risk. Bottlenecks in mine development, labor shortages in the high Andes, or unforeseen geotechnical challenges in the narrow veins could lead to production misses or cost overruns. Silver X mitigates this by using a phased 2-mill approach that allows for more manageable scaling and operational redundancy. Commodity price sensitivity. While Silver X is highly leveraged to silver prices, this leverage works both ways. A sharp correction in silver prices in early 2026, as predicted by some analysts who warn of a maturity in the bull market, could impact the company's cash flow and its ability to fund expansion from operations. However, the company's low-cost LOM targets of $15.8 per ounce AISC provide a significant cushion against price pullbacks. Jurisdictional and political risk. While Silver X has strong community ties, the upcoming 2026 elections in Peru could introduce new tax or regulatory proposals. The company's focus on its 12 to 15-year social agreements provide a strong defense, but any national-level shift in mining policy could impact investor sentiment toward all Peruvian miners.
Conclusion. Silver X Mining Corp represents a compelling high-alpha opportunity within the silver sector. The company has navigated a difficult repositioning phase and emerged with a robust balance sheet, a district-scale asset base, and a technically sound expansion plan. The disconnect between the company's current market capitalization and its $440 million NPV provides a significant margin of safety and the potential for a major re-rating as production scales. As of December 2025, analysts consider the stock undervalued, trading approximately 26% below its fair value estimate of $1.349. With a fully funded drill program and a clear path to becoming a mid-tier producer, Silver X is well positioned to capitalize on the structural silver deficit. For the retail investor, Silver X offers direct exposure to high-grade Andean silver polymetallic production with the added benefit of a proven management team and a de-risked social license.